What's up everybody, welcome back to AZ Trading, hope you're doing well. This video will be slightly different than my previous ones, however the things I'll cover in this video will be incredibly important since I'll be explaining how and why I managed to prevent a losing trade by getting out at break even based purely on logic and liquidity. Just for context, the trade I had in mind was taken on the 5th of October, yesterday, on the Dow Jones, where I placed a long entry with my objectives aiming at these 3 sets of equal highs, as well as the previous day high. And as you can see, price throughout the day managed to reach that final objective. However, the trade entry over here would have been a loss had I not decided to get out early at break even. So stick around if you'd like to know exactly what I saw to make this decision. So I've just zoomed into a 1-minute chart. And if you've watched any of my previous videos, you'd know the pattern we use is the RMR pattern, where first we look for a raid, and we can see that after price broke through this swing low down here, this is called the raid. After a bearish raid, we look for a bullish market structure shift, so breaking this swing high, breaking further swing highs, this is called the market structure shift. And finally, we look for the third part, which is the return, and this is where we'll participate in the trade. And in most cases, during this market structure shift, price will present a gap. There's one over here, and then there's one slightly under just over here. And this means once price retraces into this area, or this one, this is where we can place our longs. So I placed my entry and the stop loss will be at the bottom of the raid. So it'll be right over at this swing low. And then I could look for objectives above. And on the 15-minute chart, you know what objectives I was looking for. It was this set of equal highs, the next ones, and the previous day high. However, you can see that if I held on to this trade, I would have been stopped out during these bearish legs. So what exactly did I see in price that led me to lose confidence in my trade idea, leading me to get out at break even to prevent a loss? So if we're just monitoring price as we place our entry, we can see that price has made a swing low right at this specific area. And this swing low by itself that puts me into drawdown means nothing to me. However, if we look at this swing low and we drag that swing low towards the left, we can see that that swing low has actually made an equal low. And we all know that under equal lows is resting a lot of liquidity. And in this case, short-term liquidity. So it'll be a very likely objective in the short term. So as soon as that swing low was printed and I realized it made an equal low, my mind was thinking that price was more likely to stab further down to grab that liquidity, to grab the sell side liquidity before it runs off into its bullish objectives. If you guys stick around, after I talk about this trade, I'll mention why I decided to be bullish, so my sentiment analysis and my daily bias analysis. So back to this equal low over here, as price retraced and gave me the opportunity to get out at break even, that's exactly what I did, because to me this short-term equal low is just too likely in my eyes and it's more likely for my trade to fail. This is one of the benefits of watching price live, because you can monitor when liquidity is being generated, so you have the opportunity to get out early when your trades turn into a low probability environment. And you can see within a few minutes those equal lows were stabbed through. And let's just say that your stop loss was slightly further and this swing low did not stop you out. Once again, if we have a look at this swing low by itself, it means nothing to us, right? It's just a swing low. The liquidity under there is not significant. But what would make it significant is if it made an equal low. So if we're not too focused in on this swing low and we zoom out a little bit, if we drag this line to the left, what do you know? This swing low in fact made an equal low as well. So once again, what do you think's going through my mind? Those equal lows resting under is liquidity. It's a likely short-term objective. So price is more likely to grab that area to create a manipulation leg again before pumping to its daily bias objectives. And furthermore, let's just say I didn't get out break even over here. This was the first chance to get out at break even. If you didn't see the equal lows over here formed, however, you managed to see the equal lows formed at this second swing low, price actually was very nice to us and gave us another opportunity, a second opportunity to get out at break even before the trade would have stopped you out. So it was very nice of the market to give us 2 opportunities to get out at break even, since it was very obvious that it was hinting to us that more liquidity is being generated underneath to create another manipulation leg. And then in the end, we can see that those equal lows were once again taken. And overall, instead of losing however much we decided to risk on the trade, we ended up having a break-even trade that was purely based on liquidity and logic. So this in itself, and being able to read liquidity being generated live and knowing when your trade turns into low probability, is an important skill for your trading. I've just got some screenshots to show you that I took live, which I placed in my journal, and you can see that this is exactly where my entry was, and this is the exact moment in time where I got out at break even, and I labeled this swing low, equal low, scary, expect the RMR to fail. So I expected my trade to fail, so I got out at break even. I'll move on to the next screenshot, and you can see that this next swing low I labeled equal low once again should not be in a long here. So we already got out, but if we weren't, this would be an additional reason why we should not be in a long, since the liquidity from these equal lows is just too near term and too much of a likely objective. Alright, in my next screenshot I just said that if this swing low didn't stop you out, the next leg would have definitely stopped you. And the final screenshots were just my original objectives and then a progress picture of price reaching those objectives later in the day. Alright, so quickly with sentiment, if we have a look at how price is traveling prior to the day's opening and prior to the New York session, price is obviously quite bearish. And we know that if the sentiment is very clearly one direction, or bearish in this case, retail traders are placing their longs and they're covering their stops at recent swing highs. What this means is all these short orders that retail are making, they're covering their shorts by placing their stop losses at different swing highs. And let's just say a retail trader placed their short over here, which is an excellent area to short. And where would they think their stop would be safe? Let's say they feel their stop would be safe at these equal highs. And as price runs on, they get more confident in their trade, they go to sleep. And when they wake up, you can see that price has stopped them out by breaking the sentiment, by stopping out retail traders. And just as an added confluence, we know that EU and GU move in tandem with the indices generally. And we can see that EU as well as GU were very bearish. The sentiment was very bearish. So looking for a bullish reaction to take out the sentiment would be a fair idea. And just with daily buys, if I zoom out to a 30-minute chart and we look below, what liquidity do we have below? We just have different swing lows, but no relative equal lows, just different swings. But if you look above, we had multiple sets of equal highs. So in my eyes, above was more likely, since there's more objectives, there's more liquidity, so my trade direction for the day was bullish. And if we just do a bit of back testing and see how we could participate in this bullish move, once again, let's use the RMR pattern. So first we'd look for a raid. So below this low, we'd call this the raid. But not only that, it raided, but also reached an area. So it reached a 5-minute gap. Next, we'd look for a market structure shift. So above this recent swing high, we can call this a market structure shift bullish. And after the market structure shift, we look for a return. And in most cases, the market shift will present a gap, which is right over here. If we extend that one out, we can see that price retraces into this return area, and that could be your potential long. And if you placed your long there, you'd have your stop at the raid's low over here, and you'd have your objectives above. Whether you take them at different swing highs or different gaps, it doesn't really matter as long as it's in a logical area. And you can see that this trade would have actually been a banger of a trade. I wonder if any of you guys saw this. If you did, really well done. Excellent trade. But other than that, guys, I think this will cover it for this video. I hope you guys learned something new that would help with your trading. If it did, give this video a like and subscribe. It makes me very happy. And if you've got any questions or comments, leave them down below. I'll get back to every single one of you. And if you haven't joined our community Discord, I'll leave a link at the top of the description. You'll be able to meet like-minded traders that trade with similar strategies, none of that retail nonsense. And it could be a very useful tool with your learning. Just make sure to click the tick button when you join so you can unlock the server. But as always, take care everyone. Peace.